Good morning and welcome back to Morning Markets from True Potential. Today we're going to be focusing on the UK employment market, what that means for wages and potentially future interest rates. This morning we received UK labour market data for the month of March. The UK labour market continues to be very strong at the headline level, but when we look at the underlying data, there is some signs of softness beginning to creep in. When we look at the unemployment rate, that edged higher from 3.8% to 3.9%. However, the number of workers added to the workforce increased by 182,000, which was more than expected and the highest advancement in over 10 months. When we look at the makeup of the jobs, it's quite unusual when we think about where we are in the economic cycle towards the end of it. But perhaps where we're seeing the jobs being added is in the part-time segment and also the self-employed segment. We've seen, when we look at the numbers, 35,000 new jobs added in self-employed, 181,000 jobs added in part-time employed, and it might just speak to the current dynamic where workers desire flexibility in their lives and their working patterns, and therefore are seeking part-time roles or self-employed jobs that gives them that flexibility. When we look at the full-time employed numbers, that actually fell by 41,000 over to the month of March. And that's a trend that we've continued to see in previous months. When we look at wage data, that continues to be very strong and speaks to just the ongoing tightness within the labour markets that we're seeing. So when we look at wages, looking at average earnings excluding bonuses, that edged up from February to March from 6.6% to 6.7%. However, that was slightly lower than economists were expecting. There's still that challenge of availability of workers and the workers themselves faced with higher prices, therefore demanding higher wages. So we continue to see wages edging up, and that's uncomfortable for the Bank of England, who have been putting up interest rates aggressively in order to bring or cool the UK economy, bring down wages and bring inflation back down to their 2% target. Last week we heard from the Bank of England they raised interest rates again from 4.25% to 4.5%. What we're seeing in the market today is that the markets are expecting interest rates to increase further in the future by at least 0.25% or more. That's everything from us today. Thank you for watching, and we'll see you tomorrow.